Terry Wagner for Wagner Financial, and this is the Forex market update in gold. Today's date, February 13th. It is Saturday, and this is for last week. We did have some interesting activity last week, and we did enter a long position. I'll get to that in a second. But we did see something very interesting in terms of a possible setup over the next couple of weeks that we definitely want to watch. If we draw a support line and take this from 2 years ago in December, August, September, and carry that all the way up to the top to here, and then draw a resistance from last December, and that was the absolute top of the market, and our other point right here, you notice that what we're forming is a pennant formation. Now typically in a pennant formation, a flag formation, as the market compresses, meaning the relationship between the resistance line and the support line grow closer and closer till they hit a point, you will typically get a breakout that has a lot of energy, has a lot of power. The reason they say that is as the market compresses, that's what builds the energy. So I think that we might witness something interesting, and it's definitely something we want to take a look at. The last time that we saw a flag formation, if we look at February 18th, back a couple of years ago, and in this way draw our pennant formation here, what you're going to notice is that these are the points when we hit our double top. This was that first time that it ran around 1,000. It tried to take it out. It didn't have the ability. And on the third attempt, not only did the market take it out, but that's when it went to the absolute top of the market. So we certainly see that a pennant formation can have a lot of power. We did recommend going long last week, and that all started a week ago Friday with this long down day, this long black candle, opening just below 1110, trading all the way down to about 1060. On the following day, we see this doji form. Now, the interesting thing about this doji is really the size of its tail. In other words, the fact that when the sellers took it to this point, they ran out of steam and the bulls were able to push it all the way back up, closing near the open, is what makes this doji so significant. On the day after that, we saw a small inverted hammer, basically a shooting star that appears at the bottom of the market, but it was a combination of the three candles that actually caused us to issue a buy, and that was this last candle. This is simply a belt hold line. Now, a belt hold line is one in which it opens near the low, trades higher, it does make another high on the day, but then it closes just below the actual high, and to the Japanese, this is the belt. So we then actually issued the buy signal on the following day, and the traders that took it bought at the open right in this area, so just about 1079. The prudent stop we felt at that point was to enter a stop in the market below all of these real bodies here, so we did place a stop at 1060. Gold did in fact finish higher through the week, and we saw it close on Friday at 1093. So it was a nice move in gold, and we did position ourselves hopefully at a good point, as I said, around 1078. Now, what kind of upside potential could there be, and where are we going to find some resistance? Well, I think that we have a significant amount of resistance based on these tops right in this area at 1100. We have another resistance point just at about 1112, and that's based off of this top, and then another one at about 1123, and that's based off of this and this top here. So if the market does continue higher, I think that these are the areas that we're going to need to look at as potential resistance points so we can react accordingly. Now, if we look at the resistance line again, and that again is based off this absolute top back in December, and this area and this area, what you'll notice is that for this market to break above that pennant, it's going to need to breach this point right here, which is going to be in the area of roughly 11.5 to 11.6. So that's a point that we want to see if it can manage to break through that first resistance level there. So a break above 1100 is going to be significant, but not nearly as significant as if it breaks right here, which is above 1105, and that would be breaking out to the upside on this flag formation. In addition to the signal that the candlesticks gave us early in the week, we did get a nice confirmation, and that was on the close of the market on Friday, and that is when both oscillators, the MACD as well as the stochastic fast, were able to cross and look like they want to move to the upside. Here we can see the stochastic oscillator, the percent %D and percent %K, the fast, and they are also crossing, and that happens just on Friday also. So overall, we received a pretty good signal right in this area here, and our stochastics gave us confirmation 2 days later. So again, when we look at the big picture, I think the interesting thing that we do need to take note on is that we do have a possible pennant formation. We are trading above a longer term trend line, and we are close to, if the pennant wants to break out to the upside, to a point that would do that. Well, it's something we'll see next week. Good trading to y'all. Again, Gary Wagner with Wagner Financial Group. You can always see us on WFGforex.com.